We've experienced a very strong real estate market over the last number of years, and we're very confident about the future of housing. And there are a couple of specific reasons why. First and foremost, you look at the wealth transfer that's happening in our nation right now, $30 trillion moving from the boomers to the millennials. We have also the increase of the millennial population is double the size of the X generation. And so we're experiencing extreme demand in household needs. And so household formation, we believe, will continue to be very, very strong in the next few years.
Nick, clearly extreme demand for household needs, but why is that not manifesting in demand for purchasing houses so much? Do you think millennials have changing tastes that will remain throughout their lifetimes? They're happier to rent in the same way that perhaps they are when it comes to using Uber rather than buying a car?
Well, here's one thing that we know is millennials are the highest number of home purchasing generation right now at 36%. And they also, 59% of the same as generations prior to, have indicated that they would like to have that dream of home ownership. And so we're seeing the millennials now come to the market and have just as much interest in buying a home as ever before. We also know, however, that there are things that impact the time frame in which they can do that. For example, when you look at the average age of a first-time home buyer and some of the reasoning behind why that's delayed with student loans and marriages and children happening a little bit later in life. But now we're sitting here in an absolute perfect storm for demand because you have a great number of people, a quarter of the population in the US, and the vast majority of saying, we want to be a homeowner too.
Which, Nick, begs the question, millennial or otherwise, what do you see as the biggest risk in terms of the housing market and that pent-up demand? Is it ballooning student loan debt? Is it rising mortgage rates, or is it something else?
Well, first and foremost, there's always a major driver when it comes to the real estate market and for buyers, and it's jobs. And we're sitting in an economy right now with low unemployment. And bottom line is when people have jobs, they feel secure and they want to buy a home. And the other thing that we look at is consumer confidence. We're at an 18-year high. The last time we saw this level of consumer confidence at 133.4 was October of 2000 rather. And so people feel good about jobs, they feel good about where the economy is headed, and that means they feel good about buying a home.
What do they think about mortgage rates, though?
There's not just one factor that influences the real estate market, because let's look at it. We had 77 months, we do have, of consecutive price increases, and we had 4.5% price increases year over year. And so we've seen prices come up, which creates affordability concerns, but at the same time, even with a slight increase in interest rate, maybe we will see the price appreciation come down slightly. So it's not one single component, it's a number of them that come into play.
Nick, before we let you go, a quick question for you. Given the fact that there are so many Century 21 franchises in the New York metro area, tax reform, you've got lawmakers looking to make those tax changes for individuals permanent. We've got a cap on the deduction for state and local taxes. Is that having any impact on home purchases and prices?
Well, I think when you look at that scenario, you've got the effective tax rates that hit each different income bracket. And so I think for some of the high-tax states, it will impact some of the high end of the market. But let's look at last year. Of all home buyers, 42% of them were first-time home buyers, and 78% were 37 years old or younger. So it may affect a small population of the overall housing market.